My name is Richard C. Cook, and my new book is We Hold These Truths, The Hope of Monetary Reform. I want to welcome you to the conclusion of our six-part video, Credit as a Public Utility, the Solution to the Economic Crisis. We are reaching the end of our journey. In Part 1, we saw how such statesmen as Benjamin Franklin, Thomas Jefferson, Andrew Jackson, and Abraham Lincoln warned against the control of the nation's monetary system by the private banking interests. In Part 2, we examined the ill effects of the Federal Reserve Act of 1913 in privatizing the nation's monetary and credit system. Then in Part 3, we saw how the current economic crisis began due to the abuses within the FIRE economy, FIRE standing for finance, insurance, and real estate. In Part 4, we examined the concept of credit and why credit should be defined as a public utility, not as the banker's private property. In Part 5, we talked about Keynesian economics and how it was a compromise whereby the government tried to finance economic stability by borrowing, but kept the private financial industry as the dominant but destabilizing force in the economy. We also looked at the alternative of monetizing economic appreciation and achieving economic stability through a national dividend. Now, in Part 6, we will look at a more complete description of where we should go from here. The title of Part 6 is The Greenback and National Dividend Solutions. As an introduction to Part 6, I want to read a statement by one of the most enlightened statesmen of modern times, William Mackenzie King of Canada, who died in 1950 and served for 21 years as Canada's Prime Minister. King said, "Until the control of the issue of currency and credit is restored to government and recognized as its most conspicuous and sacred responsibility, all talk of sovereignty and democracy is idle and futile. Once a nation parts with control of its currency and credit, it matters not who makes that nation's laws. Usury, once in control, will wreck any nation." The most important thing to realize is that it's the nature of the private banking system and the fact that debt is the way new money enters into circulation that has caused the current crisis. Our nation has been wrecked by this system, as have others around the world. We have seen again and again how this system concentrates wealth and power in the hands of the very rich through continual cycles of inflation and deflation. Historically, this system, combined with use by government of Keynesian economics, is an attempt to manage modern industrial economies by a medieval relic. Really, the dubious practices of the old gold merchants magnified on the modern world stage. And given the way a Keynesian system uses government debt to finance the military machine, the main reason the U.S. has become a failing imperialist state, drowning in debt, overextended militarily around the world, is the monetary system. The banker's monopoly over the creation of money is the worst kind of privatization. The system is all-pervasive. It determines the actions of every person, everyone, including businesses, individuals, and governments, is in a perpetual rat race to outdistance the debt that comes into existence when the banking system creates money. The system also leads to long-term depreciation of monetary value. It is not surprising that since the Federal Reserve Act was passed in 1913, the U.S. dollar has lost over 95% of its value. Not only does the interest load on money add to prices, but anyone with a product in the marketplace will charge as much as possible to escape his debt or beat out the other players also in debt who are raising prices. Let's not sugarcoat the pill. Our debt-based monetary system results in a death march for the society that has been victimized by it. Today, this is the entire world. Accordingly, the method whereby all the money that enters into circulation is created through bank lending must now be abolished. It must be replaced by a system where money is created by our representative government to support the requirements of the producing economy and the needs of the nation's population. This would mean the use of credit as a public utility. None of the government's current bailout or recovery proposals takes us in this direction. They are all aimed at propping up the bank money monopoly, while the government is going even deeper into debt to create some new jobs. Today, some say the banks should be nationalized, but FDIC can already take over and manage insolvent institutions under existing law. Certainly, as many say, including the Europeans, the banking and financial systems should be re-regulated so that huge amounts of credit are no longer created for speculation, as is done today with equity, hedge, and derivative funds. True, but not even re-regulation would solve the problem. Instead of the patchwork expedients that the Obama administration is counting on through its bailout and economic recovery programs, what will make a difference is if the federal government had the ability to spend money directly into existence without either borrowing it or taxing the population, as was the case with the 19th century greenbacks. Congress could authorize a new issuance of greenback currency today. Greenback-type spending is one of the key provisions of the American Monetary Act, which has been drafted by the American Monetary Institute and supported on the floor of the House of Representatives by Congressman Dennis Kucinich. During the 19th century, the greenback, populist, and Democratic parties all supported such monetary reform measures. We need to make greenback currency the #1 political issue again today. Of course, banking apologists would argue that the greenbacks caused inflation, but this is a lie. There is no historical evidence whatsoever that the use of greenbacks versus money that might have been borrowed from the banks ever contributed 1 iota to inflation. In fact, the Civil War resulted in remarkably little inflation, while prices actually deflated through the rest of the 19th century when greenbacks were in use. Well, with the federal government, I worked on public finance for most of my career. During my 21 years with the U.S. Treasury Department, I made a deep study of the history of government finance going back to colonial days and even earlier in English history. I can say without hesitation that the dogma by which the federal government can only raise money through either taxation, borrowing, or fee-for-service is one of the most short-sighted, foolish, and historically inaccurate concepts ever perpetrated. We believe such error because we have a system that was largely put in place through lobbying by the same banking interests that attempted to gain control of our nation when we first broke away from Great Britain over 200 years ago, and finally did so through the Federal Reserve Act of 1913. Greenback funding would put these banking interests back in their proper place. Another dogma that should be abolished is that credit, once issued, must be returned to the source and canceled following repayment with interest. Rather, credit can be a simple grant of purchasing power. An extraction of interest beyond administrative costs and shared risk is the type of extortion called usury. Greenback funding would issue money and utilize credit without repayment or rent being charged for its use by the financiers. The question arises of what should be the backing for our currency. Backing by gold, which some claim they wish to return to, was always a fiction. There has never been enough gold in existence to support the currency requirements of a modern industrial nation. Greenback funding eliminates any need for metallic backing of the currency while preserving the integrity of the money supply. Today, the backing of the Federal Reserve System is the ever-increasing national debt by which we mortgage the lives and freedom of future generations. This is wrong. The real backing for any type of currency should be only one thing: the production within the physical economy that comes into existence when money is spent or credit utilized. The government would be able to spend greenback currency into circulation in a variety of ways. It could be used to pay off the national debt, which as of February 19, 2009, was $10,796,380,873,181. It could be used to help finance the Social Security program, whose trust fund has been cannibalized for other federal expenditures. Social Security could then be funded without the cuts in benefits that many are now proposing. The money could also be used to help with Medicare and Medicaid payments, or for the government's contribution to a universal health care system. It could be used to convert student loans to student grants. It could be used for federal government operating costs, as well as the cost of running the state and local governments. It could be used to provide grants or loans for federal, state, and local infrastructure improvements, or to capitalize a federal infrastructure bank. Greenback money could also be used to finance the military establishment, though at a much lower level than at present, if we no longer had to use military means to compensate for our economic weaknesses, or use the military as a Keynesian job creation program. It could also be used for a major program of alternative energy R&D, as President Obama has called for. In deciding which government expenditures to fund directly through a greenback system, Congress would have to conduct some very rigorous analysis to determine an appropriate mix between this method and what should still be covered by taxation. Taxation is a useful tool in conducting economic policy and could be used to help control the money supply to prevent either unwarranted levels of inflation or deflation. Either way, greenback funding would lead to much lower levels of taxation than we suffer today, when governments at all levels take, on the average, 30 to 40% of an individual's earnings. What governments should no longer do, except during times of extreme emergency, or to give the population opportunities for saving, as with U.S. savings bonds, is borrow money. There is no reason that a sovereign government should ever have to borrow from the banking system, foreign governments, or capitalist investors. You may ask whether anyone within the government ever advocated a greenback system in modern times. The answer is yes. One was Congressman Jerry Voris of California, who was a Phi Beta Kappa graduate of Yale and served in Congress from 1937 to 1947. This is what he wrote. What ought to happen is that the credit of this great nation should be drawn upon directly by the government, not that it should go more deeply into debt. A nation like the United States possesses an almost unlimited amount of credit. By whatever percentage it can be anticipated that production and hence potential tax revenues will increase as a result of deficit spending, by that same amount the credit of the nation and its government will be increased. This same percentage of the volume of money previously in circulation should appear on the books of the Treasury as a credit to be drawn upon just like tax revenues. To do that would be nothing more than rational and proper bookkeeping. As Voris points out, greenback money can be created by credit entries on the government's books. Period. This program of monetary control by our representative government would create a new monetary system whereby Treasury currency, United States money, would replace Federal Reserve notes. The Federal Reserve System could continue to serve as a national clearinghouse for financial transactions, but the Federal Reserve and the private banks that belong to the Federal Reserve System should no longer act as a bank of issue for the United States. Even with real monetary reform, a banking system is needed for commercial purposes. But the banking system under the American Monetary Act would no longer be allowed to use Treasury debt or any other type of asset reserve as a basis for the fractional reserve method. Instead, the Act contains a provision where banks would borrow directly from Treasury using public credit generated for that purpose. This method would eliminate fractional reserve banking and would work whether the institution was a commercial bank, a state government-owned bank, a cooperative bank, or a credit union. Thus, the privilege which banks have improperly been granted that allows them to issue new money created out of thin air would cease. But the banking system would become much more stable and less subject to abuse by unscrupulous operators. These would be the principles that should govern a monetary system not based on debt, but rather on the credit and productivity of the nation. Under the American Monetary Act, the entire system would be overseen and supervised by a regulatory authority within the federal government. Such a system could and should be implemented without delay. Of course, the system would not replace the capital markets, where people with money to invest in the private sector could do so. But they should not be allowed to use bank lending for massive leveraging of speculative investments, as equity, hedge, and derivative funds have been doing through criminal pyramid schemes. This type of lending for speculation, which the government has enabled through its policies of deregulation, should be abolished once and for all. And to those who say it is not safe to give such control over credit and money to the federal government, I say it must be controlled by someone. I would rather have it controlled by the people we elect than the private banking system that has ruined our economy and indentured our citizens and their progeny for their own exorbitant profits. Of course, elections should be fair and honest, and new laws should be passed for control and disclosure of special interest lobbying. Campaign contributions by financial interests should be outlawed. In addition, much of the debt that has accumulated during past decades should be written off. The money to fund this enormous debt was created by use of bank leverage. The fact that our government has had to bail out the banks with over $1 trillion in taxpayers' money demonstrates that the debt-based monetary system is unworkable and must be discarded. We should start afresh with a system where citizens are able to purchase items they need with money they earn or have saved. But the program I am outlining by which our nation would regain its lost monetary sovereignty must also address the key structural issues I explained earlier. There will never be economic stability until we find the right way to fill the gap between prices and income that is endemic to an industrial economic system. This structural imbalance exists under all economic systems, from pure capitalist to pure socialist. Who owns the means of production is irrelevant in this regard. We must also compensate for the continuing loss of jobs as they are phased out through ever-increasing productivity due to technology. This means monetizing productivity growth for society as a whole. Many, including the Obama administration, say we should address these issues through government job creation programs. But this too fails to address the price-income gap or job obsolescence, as I explained in Part 5 of this video. It is only through dividend economics that we can find stability and provide our citizens with their fair share of the bounty of the earth and the fruits of their labors. We should begin now by issuing a national dividend, which would be a cash payment to individual citizens by the government. Once implemented, the national dividend would introduce new purchasing power without government borrowing, government taxation, or government job creation. A national dividend would solve the problem of fewer workers being needed to produce more goods. It separates income from labor. It pays some people for not working. Indeed, some people shouldn't have to work at one or more jobs all the time just to survive, including a parent of young children who chooses not to work outside the home, the elderly, students, and those who may wish to do volunteer work or choose low-paying but important occupations like teaching or the arts. We've always known this, so why shouldn't it be part of national economic policy? The productivity dividend is the dream of the Industrial Revolution that has never been fulfilled. Today, the only people to enjoy the productivity dividend are the very rich. Both greenback spending and a national dividend would be created from the same natural power of credit that banks draw on to make profits through fractional reserve lending. But now the government would control that store of credit by providing it to people in the form of a basic income. I have estimated the dividend potential of the U.S. economy at over $12,000 a year per capita, or about $3.6 trillion for the U.S. economy in 2009. This, by the way, is about the amount our economy has been incurring in new bank debt each year until the recent crash. With credit used as a public utility, much of this debt could be avoided. A way to start is through immediate implementation of what I have called the Cook Plan. This would be a system of vouchers restricted to use for necessities such as food, housing, utilities, transportation, and education in the amount of $1,000 a month for any adult citizen who applied. A smaller amount would be provided as an allowance for children. The vouchers would be taxed like any other income and would supplement other entitlements such as unemployment compensation, Social Security, and so on. The vouchers would then be accepted as deposits at a new network of chartered public-private community savings banks that would lend at 1% interest to consumers, students, small businesses, local manufacturing establishments, and family farms. This lending would be subsidized by the government at below-market rates. To aid in the restoration of the grassroots economy, the banking system and global corporations have ruined over the past generation. This would be real trickle-up economics. The dividend economics concept, which many conservatives call a free lunch, is actually very simple. In reality, there are constant examples of this free lunch, which conservatives also take advantage of every day. Harnessing the power of the sun, as has been done during the Industrial Revolution through steam power and production of gasoline from fossil plant life, is an example. Historically, these breakthroughs accounted for exponential increases in productivity and have been a free lunch for the entire human race. Such technological advances represent a dividend for all of humanity. The second industrial revolution, that is the extraction of electricity from nature, was another free lunch of similar character. Another example was giving away free public land to homesteaders, which the federal government did in the mid-19th century and afterwards. Another is public infrastructure improvements, such as the interstate highway system, or government development of the Internet, a public utility which has transformed business and communications. One example of dividend economics already involves the direct payment of money to individuals. This is the Alaska Permanent Fund, which paid a dividend of $3,269 per person in 2008 from Alaska's resource revenues. Legislation for a similar dividend was introduced in Vermont in 2007. Injection of purchasing power through a national dividend would rebuild our nation. A renaissance in local and regional economies would result. And the focal point of decision-making and political power would also shift downward to localities. Consumers would spend their dividend locally in their communities, improving the standard of living for millions, and in some cases, generating tax revenue where none existed before. Local communities would thrive again, as would rural areas, where family farming would finally have the wherewithal to resist the creeping tyranny of bank-financed agribusiness. Again, use of a national dividend would be largely non-inflationary, because it would replace consumption lending by the banks and would call forth new production. Actually, at the level of the producing economy for households and businesses, the U.S. economy today is cash-starved. Greenback spending and the national dividend, not more bank lending and government debt, would provide the cash the economy lacks and desperately needs in order to function. The final point to be made is that the greenback and national dividend solutions are not economic recovery proposals, and they are not just emergency measures to deal with the crisis. They are permanent structural changes that will resolve the inherent problems in financing an industrial economy in a way that is fair, just, and conducive to economic democracy. To implement this program also implies revolutionary political change, where the unconstitutional control of the monetary system by the financial oligarchy is removed and replaced by a financial system accountable to we the people. Moreover, these changes could be instituted by any national government, not just here in the United States. The program I have outlined would meet the real requirements of a monetary system as expressed by America's greatest inventor, Thomas Edison. It is to Edison that I want to give the last word. He said, "Throughout our history, some of America's greatest men have sought to break the imprint of Alexander Hamilton's debt-based monetary policy in order to substitute a stable money supply measured to the nation's physical requirements. Lack of public and official understanding, combined with the power of banking interests who have imagined a vested interest in the present chaotic system, have so far thwarted every effort. Don't allow them to confuse you with the cry of paper money. The danger of paper money is precisely the danger of gold. If you get too much, it is no good. There is just one rule for money, and that is to have enough to carry on all the legitimate trade that is waiting to move. Too little and too much are both bad. But enough to move trade, enough to prevent stagnation on the one hand, not enough to permit speculation on the other hand, is the proper ratio." I believe that the program I have presented today would meet Edison's approval. This brings us to the end of a long journey. It was a journey that began for me in 1979 when I worked for the Carter White House and first learned about dividend economics. It has taken me 30 years of work and study to present this information to you today. I have enjoyed making this video, and I have enjoyed working with the thousands of people around the world who have given me encouragement and support. I hope you will let other people know about this video and that you will read my new book, We Hold These Truths the hope of monetary reform. And please contact me through my website at www.richardccook.com. Thank you for watching.